All right, y'all, back to War Boy. Pretty darn good day today. Found some beautiful bounces on those deep pullbacks we talked about last night. But you definitely could tell today was the final day of July, summertime trading. Everyone took their chips off the table this afternoon. This thing rolled all the way back down. That's how summertime markets behave. They make these big moves back and forth. It's until Labor Day. The big clue, though, right now is we had that big, kind of that grinding move down this afternoon. And I'll tell you, now you might know this already, but anytime we see these slow grinding moves like that, it gives us a couple really simple trades to look for the following day. I want to cover those trades in tonight's video because I want to make sure that you have a game plan to make some money on those tomorrow as well. So it's been a fantastic week so far. Charts are ready to go tonight. Enough of the intro. As always, thanks for tuning in and watching our videos here tonight. Let's go make some more moolah and wrap up what's been an incredible week, final week of July. The S&P SPY ready to go tonight. Nasdaq triple Qs are always ready, aren't they? I've got 4 clues on these charts that are telling us where I think the money is waiting to get picked up tomorrow morning. The first clue is right here on the hourly time frame. What do you notice right now on the hourly chart? Bullish range on the S&P, bullish range on the Nasdaq. Now remind me again, what do ranges like to do? They love to rotate up, down, and yeah, probably right back up again. Look at that Nasdaq, up, down, and again, probably right back up again. I know we're very bearish right now, but it's very difficult to call this a bear market overall. This seems to be nothing more than one big rotation off the high of that range. Now, the one challenge we have right now is there's a lot of momentum coming off the high of that's a lot of momentum going lower right now. So timing the entries down here to pick that bottom, well, we need a faster time frame because there's 2 more clues on the tick charts that I think you'll want to see because they're going to tell us how to time the entries and make some money on that rotation tomorrow morning. Before we do that though, let's check schedule for tomorrow. Second clue, remember there's 4 clues. The second clue is in the calendar for tomorrow. Tomorrow's a pretty busy Friday. There's 2 blocks of news on my mind tomorrow. The employment number, first of all, that non-farm payroll number is certainly the big headline tomorrow morning. But I'll tell you though, that ISM manufacturing index, Trump's trying to bring back manufacturing. That's the point of those tariffs, right? So that's definitely something we're watching tomorrow. And that consumer sentiment number, specifically the inflation expectations aspect of that consumer number tomorrow morning at 10 o'clock Eastern time. Anytime we see big red star news at 10, you best be paying attention. So those are my key numbers for tomorrow, 8:30 Eastern time. And again, 10 o'clock Eastern time. If I had to guess right now, I would guess between 10:15, 10:45 tomorrow. I'm going to keep that in my mind for tomorrow morning. That's our second clue for Friday morning. Third and fourth clues right now are down on some tick charts. I like to use the hourly chart as an overall directional filter, but we're not going to trade off that tomorrow morning. We trade off tick charts in our trade room because tick charts, they make pattern recognition a whole lot easier, entry timing a whole lot easier. And by the way, that is a 7,000 tick chart, upper left-hand corner. And if you're tuning in for the first time right now, that yellow line right there, that is the 21 EMA. It is the only indicator we need to find consistent winning trades each week. There's 2 really important clues help us time the entries on this tick chart. First clue, you probably see it already, is that trading range. Now ranges, remind me again, what do they like to do, right? They love to rotate up, down, up, down. And because we believe we're still a bull market overall in the higher time frame, that rotation, we call those what? Slingshot reversals. We know that rotation higher, there's more likelihood now we break out above that range because we're still overall bullish on the higher time frame. But what is arguably my favorite clue for tomorrow, and not a lot of people recognize this, we talk about this clue all the time in our trade room, is that slow grind that we saw. Again, we saw some beautiful bounces off our key levels today. Lots of folks making money with us in the trade room right now. But again, you could definitely tell it was a late summer move here. Everyone bailing their positions there towards the end. This slow grinder, right? That slow grinder is a big clue. Because whenever markets grind down like this, what happens is it drags down all the moving averages, right? It makes it a bit difficult to get that reversal. Remember, we are overall bullish on the higher time frame. This would be a slow grind down going against the overall directional bias. Big clue here. Usually we see a couple different types of trades. One, my favorite by the way, is a blow off bottom. Now I'm going to warn you right now, blow off bottoms are a very advanced entry tactic. We're going to dive into that because those can be scary, but I got a pretty good way to time the entry on us. We'll cover that here in a moment. The next one though is if we don't see a blow off bottom, oftentimes these things will keep on grinding down. And if they grind down, all of that momentum going lower is going to want to pull back, retest that low. And these are pretty easy actually. These are pretty easy, these retest trades. About 3 different ways in which we can time a retest trade. That's a great trade for tomorrow as well. And you know, I could be wrong about this. We're all the way at the bottom of that range on the hourly time frame. We could easily just rip and run higher here and squeeze right back down again, because one hallmark of a summertime market is big move up, big move down, big moves back and forth. So we'll talk about how to trade this going higher, because we don't want to chase it going higher, and we probably don't want to be trying to short it either. So we'll cover that a bit later on in this video. First things first though, let's talk about that blow off bottom. The blow off bottom has quickly become one of my favorite trades in our morning trade room. The blow off bottom. What will happen is it's all about personality. It's personality and guts, really is what it is. Cajones, if you will. So as it grinds down, what's going to happen is you're going to feel it, right? There'll be this very sharp move going lower that will separate off the moving average. These are very scary, all right? And remember, as we always say in these videos, the most uncomfortable trades, the scariest ones, are always the ones that make us the most amount of money. What I'm going to do on this is as this thing separates off that moving average, as we start pulling back on this, now one thing about blow-offs, I'm not going to blindly buy into it. What I'll do is on our faster time frames, our 1,000 tick chart, our 1,500 tick chart, like I show you all in our free video classes, I'm going to start looking for a bear trap down here. Try to get these bears chasing after this. And once those bears commit, I'm looking for a way to buy right into those stop losses. Once we see that bear trap, once we get that blow off bottom, squeezing those bears out, because if you're caught short, you get stopped out, you buy your way out of this. Once it squeezes, we then start looking for that add-on, right? The add-on's very simple. Look for a shallow pullback that separates off that moving average. The key is that shallow pullback. It'll barely miss the moving average. When that happens, wait for a higher high in price, looking to add to my position right below that low. So one of my favorite trades, the most difficult trade I will admit for tomorrow, is that blow off bottom. It'll separate. It'll be very sharp going lower. We're going to bear trap it and look to add to our winner, and then the amount below, the amount above, let that trade run for that pendulum swing rotation going back higher. Now, the more difficult one will be if we don't get that blow off. If it grinds down. Now, grinders are our nemesis, all right? Grinders are our enemy for the buy side tomorrow. I'm going to talk about why I say that in 2 seconds. Before I do that though, if you're watching for the first time right now, this might be a brand new strategy for you. I know most folks watching tonight, you guys know these patterns. I got so many emails this week, guys making money off these videos, right? So I know most folks watching, guys know this stuff already. But if you're here for the first time right now, don't you worry. I teach this entire system in my free trading course. In fact, I have a ton of examples of all the entry tactics I'm covering in this video. I cover so much more of this in my free video classes. Guys, the markets are so good right now. Everyone needs the right roadmap to make money. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy you'll learn in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. More importantly, let's face it, we make our money by timing good entries. So in that video course, I'm going to teach you 4 my favorite entry setups. You'll learn traps, add-ons, and a whole lot more. Get your confidence back by timing better entries. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, pause the video, hit that link up top there, watch that free video series. Everyone loves all the trade examples I share in that short video course. The best part is it's completely free for you. Also be aware too, guys, I'm gonna put all the important links below the video, the description of this video right now. Start first on that free video class. You're gonna love that free course. Most folks start making money all on their own, all from that short video series. So start there first. And don't forget too, if you're on the Twitter or the X platform, I post a ton of charts and videos in between my YouTube videos. If you're on the platform, give me a follow. All my details will be down there for the description of the YouTube video. So I didn't mean to distract there, but I want to take a pit stop there because a lot of folks are watching for the first time right now. I want to make sure you guys know where to get more information about all these entry patterns I'm talking about right now. You're going to love that free course. So where we leave off here, okay, yes, we may not get that blow off bottom, right? If it grinds down, okay, here's the most important thing that you remember. If it grinds down, we got big news tomorrow, right? 8:30, 10 o'clock Eastern time. If we don't get that blow off, all right, here's the challenge. What's going to happen is all of that momentum going lower, sellers are going to be trying to short above prior swings. They're trying to retest that low. And once those bears take their profit, we can get the retest trade, okay, going up. So knowing this, okay, there's 2 trades I'm looking for if we don't get that blow off bottom. If it grinds down, knowing that as it goes higher, bears will come in for that short back down again. I do not want to use a typical bear trap. I do not want to 1-2 and buy up here. I do not want that trade if it slowly grinds down. Why? Because I'm buying as it goes higher, and if we understand the principle of this, it's going to want to retest that low. That's a very common bull trap, right, in a grinding market. The way in which we work around that is we look for a technical bear trap. A technical bear trap gets me in below a prior swing. Now think about the scenario. Now we're buying below a prior swing. I'm going to take a very quick first profit target, get rid of that risk, and hopefully, no problems. Hopefully, we keep ripping and go higher, right? But again, about probably 7 out of 10 of these trades here, it'll hold above one of these highs. It'll make a run back down. It will retest that low. And again, this trade's a lot easier. The retest trade's a whole lot easier because now anybody who sells on that pullback, where's their profit targets? Their targets are back at these lows. Now think about this, please. If you're a seller up here, you become a buyer down here. So what do you think? Is that a good place to be a seller? Of course not, right? No, we're not a bear market overall. We're a bull market at the low of a big range on the hourly time frame. This is a horrible spot to be selling because you're selling right when smart money sellers are taking their profit. You're literally taking the smart money out of their position on that, right? You're picking up their leftovers, right? Their scraps. Not a good place to sell, so a great place for a bear trap. Now on this bear trap, I can be a lot more aggressive now because now everyone is a buyer. Sellers are buyers down here. Buyers are also buyers because that's what buyers do in a bull market like this. They buy retests. Now on this one, because I already know where that low is, the problem is when it grinds down like this, sometimes they keep going. A lot of times these grinders, they keep on going and we can't get into it, right? So that's why in a grinder, I got to be a bit more cautious with that technical bear trap. And then on the retest trade, now I know where rookies are trapped in. Now I can use a simple 2-try bear trap. And again, you'll learn the difference between these two in that free video course. And I'll tell you right now, these retest trades, they're easy on the emotions because you know exactly where that low is. And oftentimes these things really squeeze and run higher. So don't forget, don't just sit back and count that profit, right? Go in and put more capital to work on this. Once you learn and have the guts, the confidence to add to your winners, that will completely transform the way that you trade, right? It's a retest trade. It's a bear trap. It's an add-on. And we know the market now wants to rotate higher here with that range overall. Now, let's cover two variations of this, okay? Because this is kind of the two basic ways to trade this. But you know we're going to get some curveballs here, right? We don't always get these two perfect setups, right? So let's cover some variations. And then later on the video tonight, we'll talk about in the Nasdaq here if this thing just rips and runs higher, because there could be some easy ways to lose money up there and easy ways to make money too. We're going to cover that towards the end of the video. So make sure you stick around all the way to the end. As we go lower here, what if we don't get a chance to bear trap down here? I mean, let's face it, right? We saw this huge run down, back up, back down again. This thing may just rip right back up again. So if we make a run lower and we don't get a bear trap down there, if it just whoop and runs right back up again, what I want to do is, remember, as it bounces back up, I don't want to buy high. I want to buy as low as I can. And whenever we say buy low, I always think let's buy below prior swings. We talk about this a lot on these videos, right? So hopefully most of you guys know this already. But if we don't get that bear trap down there and it just whoop and runs right back up again, I don't want to chase after it. There could easily be channels coming down overhead here. I don't want to chase after it and buy high here. My goal is to buy underneath swings. Now, if we're really lucky, if the trading gods are shining down on us tomorrow morning, we're going to find a channel off that high, bring it down around that low. You see that right there? Okay, now what I'll do is I want to get in underneath a prior swing, right? That's the goal here, under prior swings. And if we're lucky, we'll get that beautiful bear trap, pullback combination, strength move. And again, that may not make any sense to you right now, but once you go through that free video course, you'll learn all these entry tactics. I can't teach everything in these videos here. They may be keeping short here on YouTube. But again, I do a much deeper dive on this and a lot of examples with that free video course. So that is our V bottom, right? That bounce hard off of that low, grab that channel and ride that first test, right? First test off the low of that channel is always the best entry. And the final variation of this, the second variation of this, is every once in a while, we're going to get with these ranges, we're going to get that blow off bottom, right? Strong run down. We'll get that to try bear trap. We'll get a nice winning trade off this. Again, on a blow off bottom like that, I'll take a quick first target, get rid of that risk, right? Makes sense. So every once in a while though, ranges love to break out pullback. So they'll hold the underbelly of that range and we'll see one more leg going lower. This is very similar to that retest trade I mentioned earlier. But one big difference though, remember the money zone concept we mentioned last night on the video? The breakout leg and the measuring leg, right? Remember that? That's how ranges work. When they break out, the breakout leg, which may be that blow-off bottom leg, keep it in mind for tomorrow, the size of that leg can then be used as a measuring leg on the next pullback here. Okay, the most important thing right now is that it's going to be either at that low or it'll be at that measured move, right? That's our money zone, right? Between that low and that measured move. And all we do there is, it's just like that retest trade, right? We wait for the pullback to that moving average. We're not trying to pick the bottom on that. We let those bears try twice and we squeeze those stops back up again. Retest trades, overall bull market, retest trades. Mwah, love, love, love those in our trade room. Perfect. Now we have a game plan for this grinding move going lower. But like I said earlier, would anybody be surprised if this thing just ripped and ran running higher? Because again, we have that massive range right now, up, down, up, down. Would anybody be surprised? I certainly will not. Let's go cover the Nasdaq now. I see Nasdaq getting lonely over here right now. A lot of NQ traders watching these videos. And my goodness, look at that. Look at that range rotation right now. And again, this is how summertime markets behave. All right. What I do is between you, me, and YouTube on June 15th, right? On June 15th, I put a calendar reminder on my Google Calendar. So every year, June 15th reminds me, be ready for this type of price action. All right. It really kicks into gear after 4th of July, right? After 4th of July, that's when people go on vacation. Markets get low volume, less institutional activity. It's summertime trading, right? July and August, it ends in Labor Day. It's every single year, right? So June 15th, put a calendar reminder on there and remind yourself by the 4th of July holiday, July 4th to the first weekend in September, right? Labor Day weekend, it's gonna be like this, all right? It's always like this every summer, right? So don't forget, by the time you forget about this next summer, put that reminder on there, or if you're with us in our trade room, we'll do it together, of course, in the morning trade room. Now, before we dive in and talk Nasdaq here right now, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people right now. I know kids are home from school from vacation right now, so life is pretty busy. So I appreciate you all tuning in and watching my videos tonight. So as always, thank you so much for the likes, subscribes, all the ongoing support, and I promise I'm done begging for likes here. Let's now drill down to our tick charts here right now on the Nasdaq. You'll notice a 4,000 tick chart. Nasdaq is not as much volume as the S&P, so it's a bit smaller tick chart right there. You can see that range right there, right? And again, what do ranges do? They love to rotate up, down, up, down. And again, because we're overall bullish, we're more likely now to break out to the upside of that trading range. What else do you see though? Yeah, right. Again, that big move up and kind of that grinding move going lower. Imagine now the 21 EMA, the 50 SMA, right? The 200 coming down. It drags down all of those moving averages along with it as it chops down like that, which means unless we see that blow off bottom, right? Unless it's the blow off bottom, we got to be careful trying to pick a bottom on this market. I gave you guys a couple different ways, the blow off bottom, the grind or the retest, right? We talked about that before here on the S&P. So if you want to go back over that again, the S&P, the same thing applies here to the Nasdaq. Now, if it does end up rotating, going higher here, there's a few different trades I'm looking for. The first one is basically a breakout pullback, right? This range right there, if we rotate off that low, or if we simply just decide we're going higher tomorrow, the goal will be to get a breakout pullback. Now, before you go clicking off right now, here's a few different ways in which I'm looking to trade that breakout pullback. First things first is, it's all about how the market reacts to the moving average. So if I see this thing start to jump higher here, I'm going to watch for that separation away from the moving average. If I see separation off the moving average, and what I mean by that is during the pullback, does the pullback go either at or below the moving average? That's not separation, right? That's not strength. If I see separation and we go higher, like over here this afternoon, right? It goes down, it pulls back, it separates off that moving average, lower low, no surprise there why folks sold that move. Very strong move going lower. The same is true over here now. If I see separation off that moving average, higher high in price, I now know that that is my first entry going higher. Now we mentioned earlier that range breakouts, they love to what? They love to create measured moves, the breakout leg and the measuring leg. Guys, if you want to make more money, get in the habit of holding your winners longer. Now, we all know holding winners is a good idea, but if we don't know where the market wants to go, it's difficult to hold our winners, right? So one easy way to hold winners longer is knowing this technique. When I see a range like this, and I see a successful breakout like that, I know that breakout leg is a measured move. I'm going to go out and mark up that measured move. That's my profit target, okay? Now, once I see that breakout into that separation, then we start watching for all of these prior highs over here. Now they become key levels of support. Now, on a breakout pullback, my favorite technique on a breakout pullback is a two-legged pullback, right? Think about a measured move. Between you, me, and YouTube, I always go for a bit more than a measured move, right? A measured move that goes a little bit too far is usually the best breakout pullback. Now again, it doesn't need to be two-legged pullback. It could be one leg. That works too, but the best ones are two legs in case you're curious. Now again, I'm not going to blindly buy that area. Who knows? This could easily roll all the way back down again. For the record, I have no idea what tomorrow will bring. All I know is based on this information where the best odds are of success based on almost 20 years now of watching charts and doing these videos every evening here on YouTube, right? So it may keep on rolling all the way back down again. I have no crystal ball for that. What I do know though is that this area right here, overall bull market, nice strong run going higher. A lot of momentum for the bulls now. This is not the place you want to be selling. It's not the best odds of success. I would rather take the other side of those odds, wait for bears once, higher high, wait for bears twice. Again, always a higher high because sellers, I want them trapped in and use their stops because you may not be aware of this, but if you're caught short and you get stopped out of a short trade, you buy your way out. When stops get hit, those are buy orders that get triggered, right? So squeeze those stops running higher. And again, I always like to add to my winner after those bear traps if I start seeing the separation off of that moving average. That is your basic breakout pullback. It's a separation off that moving average. It's a measured move into a two-legged pullback, a bear trap, an add-on, and let that sucker run because it's Friday. Now, let's do two more variations. Very common in these big range environments. We may pop up and start grinding. Now, this should become an automatic for you. You need to learn this and make this habitual because anytime we see markets grind, remember, again, whenever markets grind like this, they're very difficult to stop. Grinding markets, right? They pop up, they separate off that moving average, grinding off the moving average, very tough to stop all of that momentum. I don't know why, but grinding markets, I don't like to mess with them. Again, that's why I said earlier, a grinding down can really be tough to pick that bottom. Now, when I see a grinder like this, I'm not going to buy high. Remember, grinding reversals like this are because of short squeezes. These are because sellers are getting out of their positions. Eventually, the buyers want to come back and get in, and they're going to want to buy nice and low when they do. Mark that channel, and remember, look left, find a swing low, any of these swings, doesn't matter to me, but find that swing low that lines up right around that low of that channel. And I'll tell you right now, these are almost a sure winner on these because again, that grinder going higher, a lot of momentum there. I want that first test is the best test. And any of the entry patterns you guys are learning inside the free video course will easily work at the low of that channel. The final variation is a pop-up into a trading range. Okay, remember, anytime we see stacked ranges, okay, what that means is range here, range there, right? Remember, that previous range, that is our breakout pullback. The current range wants to rotate. These are by far the easiest ones to make money. In fact, this will be fantastic for me tomorrow morning, right? We pop up into a range. We wait to get below that trading range. We use that simple bear trap into add-on technique. Bear trap, add to our winner. And remember, one of the cool things about ranges is, again, they like to rotate. So the amount below the range, the amount above the range, that creates that final target on the side of that range. Breakout pullback off the previous range and let that sucker rip as it rotates going higher. All right, guys, that's my game plan for tomorrow. Now, speaking of tomorrow, boy, first day of August, the place to be is in our trade room. Guys, the easiest way, start making money in these markets to come out, learn and trade along every morning, 8 o'clock Eastern time. As always, I'll put all the important links you need below this video. Start first with that free video class. You're going to love all those trade examples. Then come join us, come trade with us, and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.